My name's Chris Downing. I'm a tax partner with KPMG in the UK, and I look after the indirect tax process and technology team globally. The respondents to this year's survey cover 23 countries. It's all regions across the world. We've had around 190 individual submissions, and I think it provides real insight to multinational companies to understand what best practices really look like, how organisations are managing risk, how they're managing their compliance obligations, and really about that ability to share knowledge and insight across organisations in an area where I think most organisations really struggle to understand what other businesses are really doing and how organisations are seeking to drive value from the indirect tax throughputs of their organisation. One of the interesting facets that's come out from the survey this year is that only 25% of the organisations that we have dealt with really have stringent metrics in place to really assess how they are performing against those kind of standards. Many of the benchmarks that they do have are largely focused around compliance, which I think is often quite an arbitrary way of measuring performance. You either pass or fail, and nothing really that focuses on the management of the cash within the organisation, the drive towards value and the drive towards greater efficiency. So over the course of the 4 surveys that we've done over the last 5 years, I think one of the strongest trends that we have seen is the move towards the appointment of a global head of indirect tax. Organisations are finally starting to embrace the idea that VAT, indirect taxes, account for up to 40% of the revenue of their business. These are significant cash flows. We now start to see the fact that businesses understand they need someone steering the ship, someone at the helm to really understand how value can be driven from those cash flows. One of the strongest trends coming out from this is still around a third of the time that organisations invest in indirect tax management is focused on compliance. If you look at the world in which we operate now, with obviously the diverse tax systems, clearly there are a number of obligations that it puts upon businesses. But it does concern me that, again, that very little time is spent on value creation activities. I think the trends we've seen since 2012 seem to suggest that less time is spent now on actually generating benefit for the organisation and far more in meeting those statutory obligations. As we've seen the evolution of the benchmark survey, again, one of the strong trends that we see is the move towards tax taking greater accountability over what happens. The head of indirect tax now has far more ownership of the activities and the declarations that are submitted and the numbers associated with it. That does in itself prove challenges because we often find that they're quite diversified teams, they're in lots of disparate locations, and trying to get actual control over what's going on the ground continues to be a challenge. When you see the trend that more than 50-60% of organisations now have a global head of indirect tax, the concern that I have is how few of them actually have visibility over the local tax filings and the local tax processes. How do they really get a handle on what's going on? The management of compliance, I think, has provided some interesting trends over the course of the benchmark surveys that we've undertaken. If I look at this through a finance function lens, I think many of the organisations, many of the businesses that we deal with, there's been a strong trend towards centralisation. The use of shared services, the use of global business services to deliver some of those back office low value processes, and many people see indirect tax compliance. One of the surprises for me is quite how rarely that seems to have found its way through to the respondents in this survey. We don't see an enormous trend towards the centralisation of tax compliance. Many of the respondents to this survey indeed continue to supply this type of activity locally. One of the interesting questions that we have considered, however, is where people see this going in the next 3 years. And we see a significant trend away from this local delivery, with around 15% of organisations suggesting they're going to move to some kind of a centralised delivery model, whether that's creating their own tax centre of excellence, or whether indeed that's then embracing the services of an outsourced service provider. What's been of some surprise to me in this year's survey is actually it appears that less organisations seem to be focusing on the risk identification piece. I think those activities appear to be quite strong looking at the data within the European and the Asia Pacific regions. But as you look to Latin America particularly, where I think most people who've responded to this survey will appreciate the complexity of the tax systems there, it does concern me slightly that it appears that the focus on risk identification seems not to be following the trends that we see in Europe and Asia. So whilst we're seeing, obviously, an increased awareness of risks within the indirect tax processes, particularly in Europe and in Asia Pacific, one of the things the surveys does tell us is, whilst controls may have been established to manage these risks, the trend towards some form of independent assurance still doesn't seem to be supporting this. Less than 50% of the respondents have an independent mechanism to validate how those controls are actually operated. There's a great reliance upon self-assessment rather than active testing. And many tax authorities remain on the basis here that if you can't show me how it works, then people do doubt the quality of the controls that are in place. The global respondents that have come back to us have been very clear that technology is a significant area for investment in the next 3 years. 67% of the respondents identified technology as being a focus area for them. Two of the items that came up most commonly was the greater use of tax engines and of data analytics. Both solutions drive organisations towards a greater level of automation, the removal of the manual element of decision making that's often been endemic within indirect tax processes, greater efficiency, greater control. The benchmark survey tells me that most organisations that we've worked with continue to be on a journey to better manage indirect taxes. The need for greater investment in technology is no surprise. We know that tax authorities around the world are embracing the idea of electronic invoicing, of greater data exchanges, the greater use of electronic information, and therefore organisations have to use the power of technology to help them better manage the processes that they have.